Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Mark Marex, Senior Director of Index Research and Development with Nasdaq Investment Intelligence, Ryan McCormack, Factor and Core Equity Strategist at Invesco, and Sam Rosenberg, Head of Business Development at Anacapa Advisors. We're here to discuss why tech could continue to lead the pack as investors discover more AI applications that could benefit all sectors. Gentlemen, it's great to have you with us at Market Site. Welcome to Trade Talks. Ryan, we had this conversation in June where it felt like it could potentially be slow for the summer, and didn't turn out that way.
No, anything but slow, right?
Yeah.
And you know, I think you look at today, it's nice to see some green on the board, and right, PPI came in a little bit lighter than expected, and you know, we'll see what happens tomorrow with CPI, but any of these price readings, they've got the potential to push the market, you know, triple digits one way, triple digits the other. But ultimately, you know, I think like what we try to focus on is the fundamental picture. I mean, fundamentals have been hanging in there for lack of a better term. Nasdaq 100 fundamentals look good on both a quarterly and an annual basis. And you know, as we look forward to, you know, some of the larger heavyweights at the end of the summer, that would be somebody like a Broadcom, somebody like NVIDIA. You look at some of the projections. I mean, NVIDIA is projected by the street for triple-digit revenue, triple-digit earnings growth on a year-over-year basis. So it seems like sort of the AI-powered story is poised to continue. Avago or Broadcom is one that seems to be trying to pull some share, but you know, NVIDIA clearly is sort of the bellwether for what's going on in AI, and it seems like you're getting earnings that flow through it. So obviously a very widely watched report. It's coming up in what, just about 4 weeks' time. 3 weeks' time. So you know, that's one that we're certainly going to be keeping an eye on. And you know, you look back past the volatility of the previous 4 weeks, and you sift through the noise. The earnings picture remains, I think, pretty constructive.
Yeah, and Sam, really the story is to stay invested if you believe in that longer term thesis of AI continuing to help other sectors evolve.
Absolutely. I mean, we're big believers that you know, you have to stay invested. It's just too difficult to do market timing or stock picking. If you're going to be an investor for the long term, then the best is to stay invested. We're big believers ourselves in technology and AI in particular. Obviously, we've seen a huge run-up of all tech stocks and Nasdaq 100 index in particular, thanks to, I would say, this AI revolution that's coming to us. There's been a little bit of a correction as of recent, right? But I think it's already behind us, and now you know, everything is sort of in the green again. And remember, AI, you know, you just talked about NVIDIA, and so thank you very much for that. Obviously, the returns of NVIDIA are quite impressive and expected to continue, but really what this means is that NVIDIA is selling its chips to many, many clients, right? And therefore, all of these clients, tech or not, by the way, will be using those chips precisely for the purpose of implementing AI within their business model. So we think we're just at the infancy of a cycle where AI will permeate through, you know, the entire industry. And so we want to stay invested. We're big believers, and we think there's a lot of upside ahead of us.
Yeah, and Mark, one of the things that you and Ryan talk about frequently in the Nasdaq 100 stocks, particularly those bellwethers, is the focus that they put on R&D. And that's what sets them up for future growth. I mean, we've looked at that historically, and there's some projections that, you know, it seems to be the case when you're thinking about investing for the future. Those R&D data really come to pass here.
Yeah, I mean, we've looked at this so many different ways over the last several years that I've kind of lost count, right? The simplest way of looking at it, as you alluded to, is R&D spending in the Nasdaq 100 is an order of magnitude higher than what you get if you look at the S&P 500 and strip out those overlapping Nasdaq 100 names. It's literally 10 times higher. So with an order of magnitude more of an R&D focus in the Nasdaq 100, it shouldn't be surprising to folks that you see, you know, patent filings from the index constituents totaling 30, 40, 50% of global patent filing activity for something like natural language processing. That is a key technological component of the AI revolution, right? So in our view, we've seen it time and again throughout the 21st century, this kind of reinforcing theory of, you know, innovation is by far the factor that drives growth in the modern economy. Growth is what drives better fundamentals long term, and we see that in the earnings growth outperformance again this year with the Nasdaq 100. And fundamentals are what ultimately drive outperformance over the long term, right? So that's a very easy story, I think, for people to understand and for them to sort of keep in mind when they look at, a recent short-term correction, which by the way is healthy, or when they look at valuations. It's all got to be kept in that context.
Yeah, and Ryan, I'm glad that Mark brought up the point that it was healthy. There's so much talk about valuations are too high, and we haven't had a move in 2024 to reset some of those valuations. It almost was like a pressure valve was released. And okay, fine, we got it out of the way. We recognize that fundamentals really did not change that much. So now, okay, let's reset, let's recalibrate. If perhaps I was not in some of those names, maybe I can get exposure to it this time.
Yeah, and we saw a pretty significant valuation sell-off in 2022, and corrections they're healthy in the market, right? We expect 5%, 10% pullbacks in any given year. I mean, it isn't just up and to the right on the chart. So I do think it provides an entry point for folks to maybe nibble at names that they've been looking at or come into positions in broader indices. But as Mark and I speak about fairly frequently, the Nasdaq 100 has traded in a pretty nice little PE range for the better part of the last 15 or so years. We've seen valuations now come down to kind of the top end or just slightly above that range, and I think you look at all of the potential benefits coming forward, you can kind of see why they may be trading a little bit higher than maybe what's been commonplace over the past 15 years, right? And that's like the quality tilt that a lot of these companies have. Certainly, their debt servicing ratios. They're just better capitalized than most other companies.
And when we think about the valuation as well, the AI trade was somewhat of an anomaly, right? It's almost like the internet in late 90s, early 2000s. It's an anomaly. It's not something that you get every year where you have that kind of story that rips through the market. But Sam, I want to focus on the volatility complex for a moment here, because when we saw that move on Monday, spot VIX was at 65, but when you look at the futures, right, it was around 37. So you could kind of tell the market wasn't believing that vol spike perhaps as much as it might have been indicated in the headlines.
No, indeed, and listen, I think this market tantrum was really triggered by significant unwind of various carry trade, specifically having to do with the yen, and you have a number of very large global macro funds which trade in multiple areas. So if they have to unwind in one area, they typically unwind in other areas which are leveraged. And we know there's a significant amount of short volatility funds out there, whether ETFs, mutual funds, hedge funds, and even structured products for that matter. So I think it was all triggered in such a way, in fact, similar to what happened in February 2018 with Volmageddon.
The Volmageddon, yeah.
Exactly, where it really it was the vol that spike that really triggered the equity rout, right? And it was somewhat similar here, because when you look at equity, whether S&P 500, for example, which is the broad-based index, it was down 5+%. Okay, that's a big move for a single day. But it's nothing drastic. We're not talking an 87 crash, right? And in spite of that, as you mentioned, the VIX spot spiked to 65, 66, right? And it really isn't warranted. And the correction was just as severe. I mean, it was 66 in the morning, but by the close of the day, it was already below 35. So yes, indeed, I think it's healthy to have these market corrections. I think this one was more technical than fundamentally driven. It was an opportunity for many to enter the market at a lower cost. And quite frankly, now, today, we're left with a situation where vol is somewhat elevated, meaning VIX's spot is around 20 or thereabouts. I think it just came below 20 this afternoon. And in fact, that benefits our strategy.
Right, yeah, tell us more about the strategy.
Yeah, of course. So we're a market directional hedge fund. And what that means is that we aim to long-term be invested in the Nasdaq, because that's our benchmark for Anacapa Quantum Fund. But we also aim to outperform the index. And the way we do so is thanks to an overlay of short strangle option strategy. So somewhat technical, it's a quantitative strategy, systematic. There's a lot of, I would say, trading activity that goes on, but we actually benefit from a higher volatility environment. So for us, having the VIX at 20 is good news. Obviously, we'd rather for it to be at 30, but you know what? We're talking about the VIX, which is the S&P. Our Nasdaq fund, as you could imagine, has a higher vol, because technology stocks tend to have higher volatility than broad-based indices. So all of that for us is good news. We harvest this volatility by shorting very short duration type strangles, and we've delivered an excellent return over the last 4 to 6 years. We have two funds.
Well, Ryan, you know what's interesting? The thesis here is how we're going to discover more ways for AI to be applicable across all sectors. And while we think of the Nasdaq 100, tech is the first thing that comes to mind, at the end of the day, it is pretty broad-based. There are multiple sectors, with the exception of finance, that are or Nasdaq 100 is their home. They're part of those constituents, and every sector. I mean, if you look at industrials, they are going to have to implement these AI strategies as well. So it's not just specific to the tech sector.
No, I mean, far from it, right? Industrials, healthcare immediately come to the top of mind. And, I think what's interesting is, Mark was talking about the patents, right? You're looking at 30, 40%, 50% of some of these themes in terms of global patent activity being filed by Nasdaq 100 companies. This was not the first time we've seen this, right? I mean, going back for quarters, they were very active in the patent space for NLP, for speech recognition and chatbots, image recognition. So it seems like a lot of the infrastructure has been being built for the past number of years. And maybe it was last year that NVIDIA earnings in May that was sort of the tipping point, the light switch moment where, okay, AI is here. But to Sam's earlier point, I mean, we're still sort of in like phase one. Okay, the chip makers are going to benefit. Well, who's next? The next kind of, is it the data providers? Who's going to be the next beneficiary? And then from there, I think the opportunities are pretty varied, and anybody's guess is as good as mine as where's going to be the next big beneficiary of AI.
I mean, Mark, think about Honeywell as an example, right? I mean, it's no longer just an industrial. I mean, it's a tech company too when you think about it, as it has automated processes across the board and leveraging. By the way, AI is nothing new. The Gen AI aspect might be, but they have been leveraging these technologies.
Yeah. I mean, look, the truth of the matter is when we look at the history of the Nasdaq 100, we feel very strongly that its success, its continued, outperformance versus something like the S&P, where, you go back 10, 15, 20 years, it outperforms 75, 80% of the time. It's got, 15% annualized returns since end of year 07 versus 10 for the S&P. How do you get that level of outperformance and that consistency of outperformance year in and year out? There's something special, I think, that's happened in the US equity market in that, the success of that initial wave of tech companies, the Intels, the Apples, the Microsofts and Ciscos of the world, sort of pre-internet bubble, and then the evolution post-internet bubble, I think, has convinced a lot of companies that want to place innovation as a central focus of their business strategy and their identity, that being listed on NASDAQ is an effective way to signal that to your investors and to the broader marketplace, right? You're joining an elite club. The Mag 7 is not a mix of companies. It's all NASDAQ listed companies, right? They've kind of been the champions, but there's a whole long tail behind them, including the likes of Honeywell that have chosen to switch their listing to say, look, this is what's driving our business today. We deserve to be listed on NASDAQ with these other successful companies because we're placing a premium on innovation. And I think that's only accelerating as we see things like IPO rates quarter and quarter, NASDAQ winning that race in the US and globally, not just in terms of total capital raised, but number of IPOs, the key sectors, the new economy, whether it's tech, biotech, consumer. We see that in the data day in and day out.
Yeah, which is so interesting because when you think about it from the tech bubble, look at some of those stocks who have entered the Nasdaq 100, part of the bellwethers, right? A Tesla, a Meta, right? So it's just, it helps to reinforce that point that it is the new modern day industrials, the new economy. And Sam, if you can think about it from a sector breakdown, let's say in the S&P as an example, if you look at energy, you look at finance, let's call it 20 years ago, and how that has shifted to more software tech. I mean, it just shows how the economy has moved to a different type of breakdown.
No, absolutely. And to your point, I mean, I think tech now, indeed is a sector, and it's best represented by the Nasdaq 100. But moreover, any company today wanting to make, I would say, strides in gain market shares, the use of tech is everywhere, right? So, maybe there are exceptions in the sort of hospitality industry where, you're a restaurant, and so, that's completely different. You still need to, book your clients thanks to Resi, thanks to other types of technologies and so forth. But really, tech is everywhere, and I think the winners of, tomorrow's, sort of growth and companies are going to be the ones who really understand how best to integrate the tech within their business model. And so we were saying earlier, AI is just at its infancy. And so today it's truly being driven by NVIDIA and others, but it's going to permeate through other sectors, other industry. And so we think the best way as an investor to really benefit from this growth is just to stay invested and to be invested into a NASDAQ 100 product, right?
Yeah.
I mean, it's just too difficult to pick winners. Yeah, if you're Warren Buffett, good for you. You could possibly do it. But for everybody out there, an index product, I think, is the way to go. Now, we offer an index products. We have a fund that's tied to the Nasdaq 100, and because we attach an overlay on top of it, we actually have sort of a better track record. And you mentioned 15% per year for the Nasdaq. It's quite impressive. We sit pretty at close to 18, 19, so we're very happy with our performance. But we think that's definitely the way to go. Stay invested, keep invested, have an index product, and that will sort of help you for the medium to long term.
Yeah, and Ryan, to wrap up here, besides the fact that AI is driving the modern economy, the fundamentals of many of these Nasdaq 100 names are really quite strong when you break it down to the balance sheet and what they're delivering and how they're investing.
Yeah, I mean, I think you look at the amount of cash on hand, right, is a perfect example. I think, again, you look at sort of analyst projections for next quarter, even on the annual basis, Nasdaq 100 is shaping up for pretty consistent, solid growth. So I think that the story is innovation leads to fundamentals. Fundamentals is what drives performance, and we think that those fundamentals of these companies and the fundamental story in general is rather strong.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.